When it comes to cover call ETFs, no one does better than BMO Asset Management. In their suite, they have a bunch of cover call ETFs. So today I'm going to talk one of their best that I believe it's good for you to invest your money. And I'm going to talk about their fees and what they invest in and their option or strategy they use to rate their call. And also I'm going to compare this cover call ETF to their peers, other either cover call ETFs or other funds that pay monthly dividends, and we're going to see the comparison between the two or three or four, and also going to compare to index, and see. So if it's your first time, on this channel, I talk about money, investing, and anything related to your finance, but mainly I talk about passive investing. And passive investing, whether is generating passive income or passive investing using an ETF to invest your money. So either one, I'm talking, this is a topic I usually talk about. So if it's your first time, just make sure you subscribe and hit the bell button or notification button. So every time I release a new video, you'll be notified. And if you like my content, please, just make sure you like. So the ETF I'm covering today, on this topic, will be a ZWC or BMO Canadian High Dividend Covered Call ETF. So overview first. ZWC, that's the ticker symbol. When you want to trade or you want to buy, that's the ticker you're gonna have on the exchange. Closing price was $18.04. NAV, net asset value, is the same, pretty much 1802. So that's net of fee, which is pretty close to this is what you want to see. You want to see NAV and market price, they're the same. Currency, of course, is Canadian dollars. And net asset value, asset and management, this is how much money is invested in this fund. So people have put in almost $2 billion, actually. When I looked a few months ago, it was about $2 billion, but right now, at this as of today, is 169 billion. So it was, but there are so many other cover call ETF that came in the market, and of course there's always inflows, right? So people have taken money and invest maybe in other funds. We look at the market volume, it's about over 300,000. So that's a volume which you want to see, because when you have the volume like this, mean your fund is liquid, which is pretty good. Annualized distribution, it's 7.29, and management fee that you're going to pay after all the fees will be 0.72. And distribution is monthly, because most people are investing for monthly dividend distribution here. Portfolio strategy, BMO covered call ETF has been designed to provide exposure to dividend focused portfolio while earning call premiums. The underlying portfolio is yield weighted and broadly diversified across sectors. And the strategy used, the fund utilize a rule-based methodology. So that considers dividend growth of the underlying stocks. They look at the yield, they look at the payout ratio. That's how their fund is structured. So they just invest in any stocks, but they categorize those kind of stocks, and that's how they invest their money. Security will be subject to a liquidity screen process. Before they buy in any stock, they have to make sure they follow those rules, or it meets those criteria they selected. The ETF also dynamically write covered call options. The call options are written out of the money and selected based on analyzing options available premium. The option premium provides limited downside protection. So they write their call out of the money, and the reason why out of money, first of all, it's cheaper that way than in the money or at the money option. And also this allows the fund to keep a lot of stocks, so that the stock being called out because it's out of the money, so they tend to keep the stocks rather than the stock being called. Those are the two reasons why they would have out of the money, most likely. When you look at the fund benefits, right? So it's benefit for it's designed for investors looking for high income, from equity portfolio, invested for diversified portfolio of highly high dividend Canadian companies, call option writing, reduced volatility, and professionally managed by BMO Global Asset Management. And that's the name recognition there. You know, BMO is one of the biggest company in Canada. And of course, whenever people hear BMO, you know, it's trusted company, you know, because it's one of the biggest 5 banks we have here in the country. So, you know, that's the thing. Those are the reason why you would invest, and those are the benefits of this fund. When you look at the price performance, growth of $10,000 from February 7th, 2017 to 2023. Had you invested $10,000, you'd have about 14,000. You know, it was 14, then it crashed a little bit. We've looked at those ones. We look at the market nav. We look at annualized performance. So it's been returning about 6% since inception. You know, 3 years is 6%, 5 years 538. So, you know, give or take about 6% annually. That's the return, and we'll see the performance compared to Canadian broader market and other funds that pay dividend as well. When you look at net asset, right? We've already talked about this one. Is a 1 billion, 162 billion right now, and currency, of course, is Canadian currency, and we've checked the market. How much it is 1804. You know, that's a price if you want to buy tomorrow or whatever it is, and yield is about 729. Distribution is monthly. That's all you need to know, because it's very important. Inception date, when the fund was actually created, was February 9th, 2017. So it would have been about 6 years, I think, I guess. Oh, 7, right? 6 years, yeah, since it was incepted. You can go on the BMO website. You can see all the ESG, the how they categorize ESG. The fund, they have a ESG score here. You know, the ESG score 99, coverage 99.5. So we look at the distribution history, right? In 2022, they've been paying about 10 cents. You can see from December 2022. If we go 2023, we can also see how much they've been paying. You can see that they paid in of course, January, February. They haven't paid yet, because they paid, January 30th, January 27. Pay date was February 2nd. Oh, they did pay on February 2nd. So we are waiting for March 2nd. That will be another date to pay. So if you want to buy this ETF for you to receive dividend at February 27, you need to be in a record, and the ex-dividend date. So you need to buy just a day before February 24 in order for you to receive that 10 cents per share. You know, so that's the dividend. You can go in there. They've been paying since then, and they always pay. They don't cut. It's one of the trusted company when it comes, very trusted and very reliable when it comes to dividend. Performance itself, I mean, is something that I don't like as much. It doesn't have as good performance. Holding is 100% stocks, and the whole number of stock they hold in this fund is 104. So it's a pretty much very diversified, because we know a lot of other cover call ETFs. They're like 50, like 50 stocks or 60 stocks, but this is 104. So it's pretty much based the whole Canadian market, because in Canadian index has about 250. So this one has 104. Is pretty good in terms of diversification. And then you can see these are the top 10 company. There's a Bank of Montreal, Bank of Nova Scotia. They have Toronto Dominion Bank, Manulife, Enbridge, BCE, Canadian Imperial Bank, Canadian Natural Resources, Canadian National Railway, Bank of Montreal, right? So you see Canadian National Railway, of course, pays low dividends, but it's very reliable, and it has higher growth of their dividend, keep growing up. So it's a pretty good the companies they selected. When we look at the holding allocation, we would see here we have geography first is 100% Canada, because all those are Canadian companies. Financial would have financials, the 40% is all financials. For energy is about 14%, because of course Canada, we have a lot of energy here. So communication is about 12.22, utility is 10.23, industrial is 8.38, material is 7, consumer staples, consumer discretionary. They don't have any real estate in it. That's their strategy. They don't have real estate. I'm not sure why, because real estate also pays a lot of dividends, but they didn't select that one. So that's all you have there. There are a lot of stocks. There's a very broader diversified. When you look at let's look at their performance and compare to other indexes. So this is a cover call ETF that we are selecting right now, and of course in 2018 it returned about 10%. We look at the Canadian TSX 60, return of index was -7, right? So it's a pretty not too much difference. But you look at the 2019, if we look at the 2022, this cover call ETF actually has outperformed the TSX because it crashed -3, where TSX crashed about 6%. Year to date right now they are pretty much the same. It's 6%, and of course the TSX is about 6%. We look at the Vanguard higher Canadian high dividend yield, this one here, you see 6% and 6%. So year to date it's a pretty par to most indexes and most other peers that pay dividends. So that's it. There you have it. So if you're really looking for solid and more reliable cover call ETF, I would say BMO is one of those. Very, very reliable. And if you want to check more, check on my other videos. I've made a lot of videos on cover call ETFs and other type of great cover call ETFs, that pay a high dividend and have better performance. So that's it. Again, if you like my content, just make sure you liked and make sure you follow, because I'm going to make a video comparing these funds and other funds, and you're going to see which fund is better for you to invest your money. That's all for today. Thank you very much for watching. Till we meet again. Bye bye.